In September, a historic event took place. The US dollar exceeded the euro in terms of a price for the first time since 2002. However, since the end of September, the market has been reversing. As a result, both the euro and the pound sterling have significantly gained in value. The situation could be explained by a change in expectations. After the meeting in September, traders started waiting for the moment when the key interest rate in Europe would surpass the one in the United States. Notably, this was expected to happen as early as the next year. However, yesterday's meeting and Jerome Powell's speech have altered everything. The fact is that the Fed considerably raised its forecast for the key interest rate for the next 3 years. And this means that in 2023, the regulator is unlikely to cut the benchmark rate. Jerome Powell gave a confident negative answer to journalists' questions about the Fed's intention to cut the key rate in the following year. However, the currency market ignored the information. Only now we can see that the euro and the pound sterling are falling. It's still unknown what measures the European Central Bank may take, given the fact that the Fed is planning to continue raising its benchmark rate. The fact is that the ECB has to deal with both surging inflation and the high unemployment rate. The latter problem could be solved only by means of the monetary policy loosening. In other words, the European Central Bank has a little room for maneuver. Even next year, its key interest rate will hardly approach the Fed's one. What's more, the ECB is likely to be the first central bank that will start to cut the benchmark rate. This may occur in the upcoming year. Judging by the market situation, today traders are waiting for this particular rhetoric from Christine Lagarde. Against the backdrop, the euro may start falling to the parity level. Thus, the hike of the key interest rate will hardly affect the market since traders have already priced it in. Traders also ignored the fact that the Bank of England raised its key rate to 3.5% from 3%. Only clients of the UK banks who took loans noticed the difference. Traders are expected to show a zero reaction to the ECB's interest rate hike to 2.5% from 2%. Investors are mainly focused on the press conference, which will start just after the opening of the US trade. Ahead of the press conference, the euro-dollar pair approached 1.07 and then inched down. In effect, buyers continued to open positions, thus causing the prolongation of the current upward cycle. Under the current conditions, a lot will depend on the ECB's meeting results, which may act as a driver for speculators. From a technical point of view, the price consolidation above 1.07 will boost the likelihood of a further rise. If the price drops below 1.06, the euro may enter a correctional phase. Yesterday, the pound-dollar pair was trading at the peak of its upward cycle. Traders were showing local interest in the long positions. There are no considerable changes in the market, except for the price stagnation within the current cycle. Under the current conditions, the existing stagnation at the peak of the upward cycle may act as an accumulation process. Thus, the limits of the range located at 1.2340 and 1.2450 could be considered signal levels. Thus, a breakout strategy is the main one at the moment. The upward scenario will become possible if the price consolidates above 1.2450 on the forward chart, and this will intensify long positions, thus increasing the possibility of a further rise. The downward scenario will be considered by traders if the price settles below 1.23 on the forward chart. This may encourage traders to open more short orders. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.